Hello everybody, welcome back for another video. Hope you're all doing well and that you're all having an incredible day. To start things off, a prediction that Bitcoin is about to begin a fourth parabolic phase that will bring the leading cryptocurrency to more than $250,000 is lighting up the cryptoverse. A post revealing the new forecast from price analyst Plan B shot across crypto Twitter this week with more than 4,200 likes at the time of publishing, but the forecast itself has reignited the great debate on the relationship between Bitcoin's halving, which will slash the rate of new Bitcoin entering the market in a matter of days, and the price of Bitcoin itself. According to Plan B, who recently told Morgan Creek Digital co-founder Anthony Pompliano that he's a member of an institutional investment team that manages roughly $100 billion in assets. His latest stock-to-flow model shows Bitcoin rising to $288,000 by the end of 2024. The analyst, or the forecast, analyzes Bitcoin's scarcity by removing time and grouping Bitcoin's growth in phases representing its transition from a proof of concept to a potential payment method to a store of value and then a financial asset. Plan B says the relationship between Bitcoin's price and its scarcity, determined by dividing the overall supply by its yearly production, are co-integrated. The term implies the relationship is especially solid, as if the ratio and price are tethered to one another. One of the the more interesting parts that I found about the story of Plan B, I think even when he first announced, I think his entire thing came out sometime in 2019. I can't remember exactly when he first started posting online about his stock to flow ratio. It became very popular. People were looking at it as far as the coordination. No, not really. It's like the relationship between the amount of gold that we mine from the earth and how rare that it actually is and how much more that we continue to make every single year because machines get better and therefore we can find more gold. In comparison to Bitcoin, we know that based off of the actual algorithm, this is how much will actually be created. We can't change it. We can't make it go super faster. We may be able to change things by a day or two as far as the actual amount of people who are mining. However, we know that there will only ever be X amount of Bitcoin. And therefore, when the halving actually happens, the stock to flow ends up changing. So this is where he became very popular. The other part tying into that was that he mentioned, and I think this is something that a lot of other people, maybe it's just me, that I tend to pay a lot more attention to, is the fact that he is a member of an institutional investment team that manages roughly blah, 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 blah. It comes down to the fact that he's not only are institutions listening to his words, like it's not just the institutional team that he's a part of course, they listen to what he has to say, but one can only assume that other institutions at this point are also talking to each other as well. So when you're part of one team or one group that has around roughly $100 billion in assets, one can only assume that they have a lot more money on the side to be able to invest in cryptocurrencies. And when you start putting out numbers like this as to exactly where this could go, and you back it up with math and you back it up with science and you back it up with so-and-so saying that this can happen and coordinate with this, other people then start to pay attention. So that's one. I find it more interesting that he is in a herd of people who have tremendous amounts of money behind them, and therefore this money could easily slosh into the cryptocurrency space. Should they listen to what he has to say? And one can only assume that they are. Macro investor Raoul Pal says the new model, which Plan B designed to also evaluate gold and silver, offers a powerful method of analysis. He said, "This is what I saw in Plan B's model when he first revealed it. It gives a great valuation for not only Bitcoin, but gold and silver too, and other similar assets. It's super powerful for relative valuations and outright valuations for all these assets. Amazing work." However, the forecast is also earning plenty of detractors, including economist Alex Kruger. He says the fact that Bitcoin scarcity is locked in and not random fundamentally destroys the predictive power of the model. He said Bitcoin stock to flow and price are not co-integrated. Therefore, the stock to flow model has no predictive power. Stock to flow cannot be used to predict price. Stock to flow and price are not co-integrated because stock to flow is not a unit root process, i.e., it is not random. It is determined by an algorithm, not randomly. Controlled supply is the whole point about Bitcoin. Here's the actual article post on Medium. Here's his latest post from the guy named Plan B. Bitcoin stock to flow cross asset model. It's becoming incredibly popular. I think it has actual, yeah, if you look at the actual chart from what he's based off of his actual, I think the blue is where he says the price is going to go, or where it has been going based off of his models. And therefore, thus far up to this point, we've remained within that range. If you look right here at the very end where this last little red blip is, there's the jump, which is also really weird because this isn't like he hasn't just created this. This was actually created before, but he published it in March 2019. So therefore, it's somewhere actually around here. It's not actually even at this jump. He's not saying now that prices have been going up in the last couple of days, and therefore there's the line going up. So it leads to a very heavy discussion, because if his models are correct, or if all the other things that he's kind of, I won't use the word predicting, analyzing, and has thus far been relatively correct, what happens if he is correct? What happens if we see within, I forgot what I think his model for the end of this year previously that he posted in 2019, if I'm not mistaken, I think that Bitcoin was going to be 50,000 the end of this year and 100K by the end of next year. I think this is where his numbers were kind of floating around. And then by the time he got to 2028, I think that's when it got to the $1.3 million Bitcoin and all those other insane numbers. This is very popular right now. A lot of people, I think, are looking for ways to either understand Bitcoin, predict Bitcoin's price, try to figure out where the market could be going, how things are kind of correlated. He also talks about phase transitions. For those of you who have not read this, I'll kind of give you the quick rundown. Talking about how things kind of, I mean, it sounds silly. He goes from, water goes from a solid to a liquid to gas to being ionized. The US dollar backed by gold, backed by something, backed by nothing. This really one of the things that he kind of says around here. And then he talks about the actual phases of Bitcoin, where Bitcoin has come from, the narratives that have died down, and the narratives that seem to be taking shape, which also then coincide with what he believes are going to be the new phases of Bitcoin, and eventually will be solidified as simply not a store value per se, but like a unit of measurement. I mean, the words here are kind of small. So it goes from eCash, is a proof of concept. If you were not here in the very beginning, Bitcoin being known as eCash was a very popular thing, to a cheap payment network, which we know didn't really pan out too well. Anonymous darknet currency, which also was a very big thing. People tried that for a very long time. That was one of the main ways that people tried to talk down or negatively about the cryptocurrency space. It was that, well, it's only being used by criminals, and then we figured out that it wasn't. So that entire narrative dropped down. The reserve currency for crypto, that's the green right here. And this is also kind of picking up as well. A lot of people think that this could happen. I don't know. I can't say that Bitcoin itself will be the reserve currency for crypto, if not everything, but I do think it will be a reserve for something as a unit of measurement. This one right here is censorship resistant e-gold. I don't think this is ever going to really leave Bitcoin's narrative, especially as we end up or constantly talking about Bitcoin as a store value, Bitcoin replacing gold, money from gold potentially then sliding into Bitcoin, and then Bitcoin's price rising and becoming stronger, and yada yada yada. And also the censorship resistant one, as far as, while we know that transactions can be traced or followed, if you give them enough information, they can kind of follow anything. However, people around the world being able to use it and or transact in it, despite people saying, no, you can't do that. And also us knowing that we are going to have private transactions at some point on Bitcoin's network, to programmable shared database, to an uncorrelated financial asset, which is what we've been hearing over the last couple of months. You may have realized there's been a huge uptick and people talking about that Bitcoin's not correlated, Bitcoin is uncorrelated. If Bitcoin goes up when the stock market goes up, people continue to still say that it's not correlated in some sort of way. I think any type of correlation that we see amongst risky assets will continue for a while. I don't even assume within the next 4 years that Bitcoin is going to leave this volatile period. I think if anything, speculative, and that even has to go as far as real estate, starts going down, I think Bitcoin and the rest of the cryptocurrency market will also take a hit, because these are speculative assets. In about 8, 9, 10 years, when Bitcoin is being used, secured, guarded, has things based off of it from governments, whether those be bonds or other currencies themselves. Like I said, again, I'm giving it an 8 to 10 year time frame. This is when I think that Bitcoin will stop being volatile, because we'll know for a fact that X country has this amount, X country has that amount. We'll have gone through 2 halvings, and Bitcoin stock to flow will be so ridiculously low, as well as the level of inflation. Therefore, that's how things kind of pick up. At the moment, like I said, this is incredibly popular. This is all over the internet. I think it is one of the more... I can't use the word reliable. I think it makes the most sense when you kind of really look at everything that he's talking about. It's no more just a, well, Bitcoin's at 7,200 and therefore the price went up to 7,400, so the price has to go back down. That's complete nonsense. When you actually tie it into exactly, other world models, other world figures, exactly seeing how much is here, how much is there, the actual supply decrease, the amount that's been locked up, the amount that's going into DeFi projects, the amount that have been lost and gone forever, how many people are buying on this actual trend line of demand, how many addresses are rapidly accumulating so that they can have at least one whole entire Bitcoin. And then you get into the discussion of, well, there's not enough for all the millionaires in the world. And there are people around the world right now who are definitely not millionaires, but they have an entire Bitcoin. So all of this really ties into it. And this is why I think it becomes incredibly popular. But once again, these are predictions. I think this will be a if you're right, you're right. If you're wrong, you're really wrong kind of thing. People will be following this man's words for a while. If we have Bitcoin going up to 50, and I dare not even say a proper 50. If Bitcoin gets near a $50,000 coin by the end of this year, people are going to start listening more to this man's words. It could even then become like a bit of a self-fulfilling prophecy, if you kind of want to say that. Like if we get near a $46,500 Bitcoin, it's not 50,000, but it sure is pretty close. And therefore his other numbers start becoming true as well. More people then start panicking and also start buying more Bitcoin in anticipation of a, what was the number? $288,000 Bitcoin within the next 4 years. But then we actually have more people who are then buying into the market as they're trying to get as much Bitcoin as they possibly can before his prediction ends up coming true. There's less Bitcoin. Second halving ends up happening, and therefore he's re-releases new numbers. He's now seeing 355,000 because of the scarcity of Bitcoin, and then it kind of just continues on going that way. The point is, we are here. We're right at this point, right where that red dot is. There have been an enormous amount of predictions so far these months. We've had predictions before for Bitcoin's price, but I mean, they're really, I don't want to use the word out of control. They're everywhere. And I want to say about 90% of them are in the same boat as far as where they think Bitcoin is going based on their numbers. It's all quite fascinating. It's not fascinating. The fact that we can have an $8,000 something Bitcoin, and even by the end of this year, multiply that by 4, 5, 8, 6, 8, 5, 50, 24, 4. It's incredible. Nonetheless, in 4 years, a Bitcoin being worth $250,000, and you get into the, that discussion can continue. Anyway, the entire super cycle idea is very popular, and even if you go to the lower end, we still have all the predictions from Pompliano and this blah 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 and all these other people who say that by the end of next year we'll still hit 100,000. That's still insane. Was that adding $92,000 to Bitcoin? So it's still kind of crazy. Anyway, and I guess also tying roughly directly into this as well. For those of you not looking at the screen right now, it says Bitcoin surged 4,000% after it took this level in 2016. It just happened again. These articles are everywhere. I'm not going to even read through the article because it's you kind of get what it's saying. Over the last, I want to say 3 to 4 weeks, it hasn't been much longer than that. It was after we bounced back from falling down to 3,500. The amount of articles were talking about that we hit a golden cross, a golden number. We passed by resistance. We passed by so-and-so. We're above this, or that Bitcoin is showing relative some type of a correlation in price from 2016 and or 2017, and therefore it's showing the levels again. It's showing the same kind of thing. It looks like it's going to be similar. They're all, I mean, basically coming to the same conclusion that if you see the same market trends happening over a certain amount of time, especially after we had the last halving, which was in 2016, and therefore it's showing the same movements all over again, that we are supposedly in the run for another type of movement upwards. Once again, speculation. Nobody knows, but I mentioned before, it's very, I'm getting this very weird, creepy 2017-esque feeling all over again. It would be kind of cool. Just be prepared this time. I'm telling you right now, you imagine this is the year. Just imagine, let's say. Imagine this is the year where the market actually ends up going crazy around like August. And by the time we get to December, crazy new all-time highs. And if the market then falls back down around January, February, you do not want to be that person who did not take profits. Because imagine having to wait another 3 years. You would not be happy at all. I'm locked and loaded. I'm ready. Like I have my entire game plan is completely set. I know exactly what's supposed to happen, when it's supposed to happen. I have the prices in my head where I plan on selling, where it's going to be allocated, and yeah. Without further ado, let's move on. Maybe one of my favorite stories in a very long time. On Friday, the 1st of May, around 11 a.m. or 15 o'clock UTC, Elon Musk's Twitter account sent out a tweet that said, "Tesla's stock price is too high in my opinion." An action which the market immediately punished. The day started with all major U.S. stock market indices, or indexes, in negative territory due to three things: a disappointing Q1 2020 financial results. Of course, I mean, were you expecting them to be amazing? Terrible U.S. unemployment numbers. For those of you who do not know, the latest numbers that we had are over 30 million people within the United States. 30 million, not 3 million, 30 million people have filed for unemployment. And once again, these are people who are eligible to do so, because there are people who simply can't, are not able to. There are people who have not worked at a job long enough to be able to qualify for unemployment. So it's believed that these numbers are a lot higher. And once again, these are only the people who have filed, not the people who are currently in furlough, who are probably going to be fired, or whatever the other case might be. And also, apparently, the U.S. is thinking about imposing new tariffs on China, which I'm sure they're just going to love. I'm sure that's definitely going to help the economy. On Wednesday, Tesla reported its Q1 2020 financial results, with the company managing to achieve its third consecutive profitable quarter. How? Earnings per share were $1.24 per share, and revenue was $5.99 billion. However, what was much more interesting was what happened during Tesla's Q1 2020 earnings call. Apparently, Elon Musk does not care for the current 19 situation, and the rumor goes that he is annoyed that he can't reopen Tesla factories, and apparently is worried about profits before humans. Well, things got even more crazy today when Musk, who is no stranger to controversy, on Twitter seemingly sent out, because no one knows for certain, but it went from his account, seemingly sent out a strange series of tweets. And the tweets are, this is why I said this is probably one of my favorite news stories in a while. The first tweet says, "I am selling almost all physical possessions. Will own no house." A minute later, "Tesla stock price is too high. IMO, in my opinion." Needless to say, the market did not find a tweet about the Tesla stock being priced too high terribly amusing. Terribly amusing. And the stock fell by around 10%. It says, of course, we cannot be sure that the Tesla CEO actually sent out those tweets. What if you have paid attention to Elon Musk's tweets before? You'll know sometimes they're very musky. They are definitely out there. So I mean, at least he was being honest, because why would your stock or your company be valued higher with everything that's been going on? Like, it's weird that every other company is hit really hard, but for some reason yours just happened to do pretty well. And even then more so, it's the same exact thing we were talking about before with all the other stocks. Like, why were other stocks going up a couple of days ago? There was no reason for the other stocks to go up. Anyway, yeah, if you didn't get a good laugh out of that, or if you didn't find that amusing, we don't have the same kind of humor. Because can you imagine on any other, just imagine in general, like, this has also happened within the cryptocurrency space before, and it's actually kind of weird. You may remember 2018 when Charlie Lee was like, I don't think, it's like, I think he said that Litecoin's price was currently too high, or it was overvalued, or don't get too into Litecoin, because it was like, why would you say these things? Like, just kind of sit in the corner. So anyway, yeah, I highly doubt, I don't foresee a future where Elon Musk is not living in a house, if not also on his own island. But thank you for making the internet a more interesting place. And without further ado, let's move on. Next up, Nasdaq has partnered with R3 to offer a platform for digital asset marketplaces on the Corda blockchain. The companies announced on Wednesday. Capital market participants can now use Corda to support the issuance, trading, settlement, and custody of digital assets. This was said by the head of digital assets at Nasdaq. The ledger technology is integrated with the Nasdaq financial framework, which also connects to several other capital market services, including matching engines, surveillance, data discovery, and reporting services. They said the relationship with R3 plays an important role in Nasdaq's developments of solutions that support the creation of dynamic and trusted digital asset marketplaces. R3's Corda platform is designed specifically for highly regulated environments, and their platform fits well in our technology ecosystem. For those of you who do not know, R3 is a partner with Ripple. And I know this perked a lot of people's ears up as well, whenever people hear R3 or the R3 Corda, they usually tend to think of Ripple. If you didn't know, now you know. So of course, there's speculation around as to exactly what's all of this going to be happening, yada yada, especially when it comes to the actual highly regulated environments. The point is, even if you look around here, the issuance, trading, and settlement of digital assets, we are seeing what I predicted before. I mean, it wasn't even like a crazy prediction. It was more like, of course, this is going to happen. The major players want to keep the pie for themselves. If you have other platforms that are allowing for the issuance, trading, or settlement or custody of digital assets, of course, the Nasdaq and New York Stock Exchange want to make sure that they are ahead of the pack, or that they have a share in the market as well. Thus far, I have been relatively surprised, I want to say, that even if you look at the numbers, I mean, BitMEX not so much, but as far as Binance being way ahead of the New York Stock Exchange, that yeah, one would assume that a trusted name in finance like the NYSE would have, dominated the markets. But this is also the first time in a while that we're hearing from Nasdaq. We haven't heard from Nasdaq in a while in coordination, in news that has to do with cryptocurrency. So yeah, I assume they're still working on things behind the scenes. Anyway, Nasdaq is using R3's Corda. Maybe, but no, yeah. Oh, wow, that's weird. For those of you looking at the screen, I thought that was an F. Yeah. So you get what I'm saying. That's why I was like, why would they have that on the screen? But it's not, because I'm looking at the word weirdly. Nasdaq hasn't really announced anything, other than this, but I assume they're going to announce relatively soon that they're going to be custodying assets for the wealthy until the wealthy really don't use their platform, and then they'll start announcing that they're kind of doing it for everyone, because that's how things work. Anyway, that's the Nasdaq R3 Corda news. And without further ado, let's move on. Is it hailing outside? Jeez Louise. Binance announced on Tuesday that it has added support for 2 new fiat currencies, the new Taiwan dollar and the Australian dollar. As per the official announcement on the website, the new currencies will be available for peer-to-peer trading between Bitcoin, Tether, USDT, yeah, it's Tether, Ether, Binance Coin, Binance US Dollar, and EOS. That's weird that they would have EOS at all. It's usually Litecoin is usually anyway. They said Binance is looking for local peer-to-peer merchants who have a stable source of cryptocurrencies, and The Walking Dead, see, TWD, and Odd merchants can profit by offering The Walking Dead or Odd, provide cryptocurrency trades, and enjoy tailored benefits including zero-fee security deposits, zero transactions, and ad fees, VIP discounts, as well as exclusive customer support. The news being Binance has added 2 new fiat currencies. No one should be surprised. They keep doing this every single week. I wonder what the total number is up to. I'm going to say 38. 38 sounds like a very reasonable number. I think every week we get about 3 to 5 new fiat pairings on Binance. So cool. If you are in Australia or Taiwan and you've been looking to use Binance with your local paper currency and you wanted these coins, well, there you go. Yeah, let's move on. And also, this should be super unsurprising news. Several large cryptocurrency exchanges are working to improve their internal infrastructure after the volatile crash that happened on the 12th of March, and it exposed a number of glaring weaknesses. Huobi, a leading exchange based in Singapore, is adding a circuit breaker mechanism that will halt liquidation when prices become too volatile over a short period of time. Although it does not shut down trading entirely, the new addition is similar to existing systems on Wall Street and is designed to prevent excessive losses during periods of market panic. What happened a couple of weeks ago is that the news was, I believe it was BitMEX, Coinbase. I don't think Binance was in this particular thing, but there was another crypto exchange that apparently, as prices were dropping, these other 2 or 3 exchanges apparently went offline momentarily. It was Gemini. It was the Gemini twins. Went offline, and people were saying, hey, why did you unplug? And they said that it was because of an overload, things were so-and-so, the market was blah. The idea was that people were speculating on is that prices were dropping too fast, too furious, and therefore they decided to unplug for a couple of seconds until the market got itself under control, because people were saying that if they did not, no one knows that if they did not, that Bitcoin could have slammed back down to 1,000. And this is, I mean, who knows? One, and it's also significant to remember that we also popped back up to exactly where we were before the drop, just a couple of minutes after. Global exchange Binance is working on a number of changes behind the scenes. Changpeng Zhao told Bloomberg that issue number 1 is ensuring the exchange can handle the heavy load it experienced last month. He said, we are changing a lot of our internal systems just to be very cautious and conservative and be safe about it. The number 1 thing we are focused on right now is just to increase system capacity. BitMEX, based in the Seychelles, has been working to prevent further attacks on its infrastructure after experiencing 2 DDoS attacks at the height of its last month big market sell-off. We spoke about that before. Same thing, it happens all the time to different cryptocurrency exchanges. BitMEX receiving DDoS attacks is not exclusive to BitMEX. It happens to nearly every website, actually. Every major website has a DDoS wave hitting them quite frequently. Anyway, yeah, this is going to happen across every cryptocurrency exchange. Don't think that there will be one that won't use it, especially the ones that are more regulated than others. They're going to try and make sure it's the same exact way that stock markets work. If you see that the Dow opens up at 10,000 and about 18 minutes later it's at 8,800, about 12 minutes later it's at 6,500, they hit the circuit breaker just to make sure, hey, everyone calm down. Get it together. And then they flick it back on 1 hour later and things kind of stabilize. So this will happen, I assume, a couple of times over the next couple of months. Just saying. We've even seen it before where crypto exchanges have been accused of unplugging as prices were going up. I don't remember which exchange it was, and I believe it was in maybe 2000. It wasn't in 2017. It must have been 2018, 19. I don't remember. There was one that was accused of doing it, and people were like, come on. Like, You can't stop it as prices are going up. Anyway, that's news. And let's move on. And to finish things off, the Switzerland-based Capital Markets and Technology Association has published a common industry standard for the custody and management of digital assets. Announced on the 30th of April, CMTA's Digital Asset Custody Standard aims to clarify the differences between storing cryptocurrencies versus traditional assets, as well as to set baseline security and operational requirements for industry actors. CMTA is a nonprofit, independent association established in Geneva in 2018 with the aim of promoting the adoption of distributed ledger technologies such as blockchain and digital assets in the financial markets. The CMTA's General Secretary Fedor Postryakov, a partner at Swiss law firm Lenz and Staelin, underscored that the new document represents the Swiss financial industry's first step towards reaching a consensus on common standards for the custody and management of digital assets. They said this will greatly distribute the emergence of fully digital capital market infrastructures, including integrated custody and secondary trading venues. Cool. I assume this has to do with the Financial Action Task Force telling people that they have to get it together as far as having industry standards, especially for custody. Once again, I'll tell you right now, if us here in this circle right now are worried about the custodying of, the potential losing of cryptocurrencies, crypto assets, or even things that we have, you also have to understand that when it comes to a lot of this stuff is put in place just for rich people. I'll tell you that in the frankest way possible. When things are announced like this, not saying that this one company in particular is just for the rich, but please understand that whenever we get news like this or whenever these things are put into place, it's because when big market players enter the space and they put in $1 million, a couple years later they have $120 million, and that money goes poof and disappears. Someone's going to have to answer for it, and it's usually the government and or a bank and or an association or some type of company. A lot of these parameters have to be put in place to make sure to protect rich people. I just try to be honest with all of you, but that's exactly how markets work. It's the same exact way before that. Remember when cryptocurrencies years ago was not a threat and didn't pose a problem? It's because only normal people were in the market. But for some reason out there, seeing big money behind the scenes, and these billionaires are now talking optimistically about the cryptocurrency market. And the big players are also getting into the markets. This is where we get that discussion of, well, I mean, now we have to have rules for it. Like, you know, you got to protect the people. It's not the people. It's just a couple of thousand people at the very top of the pyramid. But yeah, so that's wonderful. This is, or should have been, I expected this to happen. I couldn't finish the sentence any other way. Anyway, yeah. As always, a very special, what's happening? Okay, very special thank you to my Patreon supporters. I gotta speak English. Professor Wally from Gunbot University, Utopia 569, Yasha Harari, Moonman High, XRP, The Pothead, Joshua Vineyard, Martin Stoyer, Chongo Lolo, Tsongo Lolo, Nostromo, John Sarston, The Animal Reader, A Bibliophobia, Barebones Mining, Todd Mullis, Adam Graysick, Mohammed Maroney, Massive Ventures in Thailand, Brady Neal, Jared Schneider, Wise Night Owl, 242 to the World, Crypto Joe, Bankroll Network, Adobo, Crypto Artist, Cold D3D, Nicholas, One Earth, One Peace, One Love, Damien, Setsuna, Nick Kanaya, Richie Richard III, Vlad the Impaler, Crypto Bitch, Shipmate, Paxis, Nick Manji, Alavori, Anthony Charles, Jim Garner, Jeremy Fox, Minting Coins, Miller, Hitch Test Every Day, and Kyle Skips Leg Day, Yes to Crypto, Buddy May, Buttface, Anytime Fitness, Monk's Corner Staff, Arfmedic 17, Bake Me a Cake, Tigara Macho Nisa, On Crypto with Lionel, Crail, and Michelle, URL, and hold on, I have to sneeze. Thank you all very, very much for your support. Thank you to everyone who is a supporter of the channel, and thank you to everyone who has been, going through my affiliate links. I didn't know how to phrase that. My words no work today. At the moment, the market's sideways down. So we're down, but not like down. Bitcoin is currently down by 0.11%, so a tenth of 1%. It was actually in the green when I first started the video, around here. Yeah. It's important to note that people were saying that when stock market started to tumble over the last 2 days, that the cryptocurrency market didn't completely collapse into itself like many people were expecting. People were assuming that any type of correlation that there might have been would have also decimated the cryptocurrency market, but it seemed like we stopped and we are poised or in a good enough area that Bitcoin could potentially retry $9,000 within the next couple of days. But who knows? Who knows what's going to happen? That's the exciting part. I mean, it's exciting for me. I find all of this insanely exciting. Like I wish I could put it into any other type of terms. The fact that we're so close to the halving, the fact that prices are going up, the fact that prices are even just going sideways, the fact that I have a chance right now with the prices, and this is not financial advice, the fact that prices aren't skyrocketing right now allows me to buy more of the stuff that I wanted to buy. It's very interesting. And then you get into the entire topic and discussion of $50,000 Bitcoin, $80,000 Bitcoin, $3, $4, $5 XRP, $300 Litecoin, $1,500 Ethereum, the Ethereum halving, the this and the, I mean, it's a very fun time for me. I'm enjoying myself. I do hope that you've all enjoyed. I do hope that you all are having a great day. Go away. Okay, I couldn't move my mouse for some reason. All are having a great day, a great morning, a great afternoon, a great evening, wherever you are. This is the greatest thing ever. Wherever you might be, I do hope that it's absolutely fantastic. Thank you all once again for watching and or listening. Hope you're all doing well, like actually genuinely doing well. Like I hope you're all safe and okay and making sure to laugh every day, watch something funny, video chat your friends, do something to lift your spirits. I know it's difficult, but we will get through this. Thank you all once again for watching and or listening, and I will most certainly be talking to you all soon. See you.